Welcome back to the Watch List. We want to bring in our panel to talk all about consumer confidence and the data we got in today, which shows consumer confidence at 8-month lows. Stephanie Guillard is with us, senior economist, global indicators at the Conference Board, and Jessica Kriegel, Chief Strategy Officer, Workforce and Labor at Culture Partners. Thank you both for being here. Jessica, some of your thoughts. I mean, consumer confidence clearly missed expectations, but in fact moved to the lowest levels in 8 months. It was quite a dramatic move. What do you think drove this, and will it continue?
Well, uncertainty breeds insecurity, and there is a lot of uncertainty right now, whether you're on the left or the right, whether you support the Trump administration's efforts or not, it doesn't matter. You don't know what's coming. There are so many headlines that are hitting us daily that businesses and consumers alike are having to react to how they're going to respond. I was talking to a CEO yesterday about tariffs, for example. That's not just the tariffs department that will handle that. That's something that finance and legal and production and pricing, everyone gets involved in responding to that policy change, and they don't know how they're going to come together and drive results around this major change management issue. And so there's uncertainty at all levels, at CEO level and at the employee level.
Okay, understood. Stephanie, your thoughts?
Well, I think there is one dimension to add to this. I mean, of course, we have the uncertainty. We have some potential pessimism about the future of the labor market. But I think what's very important also is what's happening right now to inflation. Consumers tend to react to the price they see when they go shopping. There has been some increase in some specific price, including the price of eggs recently, that seems to be affecting consumer confidence. And just overall, when we ask consumers what is driving the most their view of the economy, inflation and prices are still very high on their list. They are also mentioning, the U.S. politics, the new administration, but this goes both ways. We have some very positive comments and some negative comments, so it's really difficult to tie which one is driving the direction. We also saw some substantial increase in the mentions of tariffs on a negative way, but we also saw some increased mentions of eggs and egg shortages.
Right. Well, the egg shortages, you have avian bird flu. You can't really do that much about that. Tariffs, that is something people want to know more about. And it sounds like we're going to get those 25% on Canada and Mexico. You already have 10% on China. Those seem to be in place and could cause more inflation. And so, Jessica, when does something change? Because also one of the sentiment reports I had seen was sort of down the line. The Republicans felt better. The Democrats didn't feel as good. We still have some issues by politics, right? So when will the whole country feel good?
That's the question, isn't it? The million-dollar question. I will say our perception, our confidence, so to speak, is tied to the world that we are in. So if you are a top performer and you're doing well and you know that you're going to be able to get a job no matter what happens to your business, your confidence is going to be high. So right now, if you want to feel good, your job is to take accountability for the results that you're driving so that you are someone that anyone would want to have at your organization. If you think about the federal workers right now, their confidence is probably extremely low because they do not know what's going to happen to their future careers. And so that's our perception is based on our own reality. And so we have to own our reality if we want to make a difference right now.
I mean, rates are coming down a little bit. We just finished talking about housing, but the expert I spoke with didn't see housing mortgages coming down below 6%. So, Stephanie, people will still be pinched with inflation. Nothing's going to change. Does this hurt the economy ultimately?
So we need to wait and see. You just mentioned housing. Just to mention something from our survey, we saw some increase in the share of consumers planning to buy a house in the next 6 to 12 months. So that's a good news on the upside. And of course, this most recent confidence survey data is pointing to potential downside risks. However, we were in this situation. I mean, you mentioned this is 8 months low, which means that last year in April and in June, we were more or less at the same level of confidence. And consumers kept on spending. So we are very cautious about how this lower number is going to translate into spending. So that's very important to keep in mind.
Yeah, and it was a big drop. I think there's a lot to take in. At the same time here, Jessica, we may have a more favorable corporate tax rate. We may have more manufacturing here at home. With the tariffs, the government may have more money and things like that. Doge may scoop up some money and maybe even give it to the folks. There are a lot of good things that can happen for Americans. Maybe that can help the number.
Certainly. And the thing to remember, though, is right now we don't know. And the markets prefer knowing bad news or knowing good news over not knowing. That's the key here. So this uncertainty is where we're seeing a lot of the confusion. You're seeing the markets drop. And that's where we need to get past the wait and see phase in order to understand the long-term impacts. And so businesses can respond. CEOs, if they know what's coming, they can create strategies around that, get people motivated around acting in the way they need to act to drive results. And that's what we're waiting for right now.
And Stephanie, your thoughts on the 98.3 number? Is that an okay number? How do we interpret that number? I mean, when it's 95 or 90, it was over 100, of course. Your thoughts on the actual number itself?
So the long-term average is 96. So we are above the long-term average. And basically, we are still in this kind of narrow range where our consumer confidence index has been moving in for the past 2.5 years. We are at the bottom of the range, but we are still not outside the range. So that's why I'm saying we need to see where it's going in the next couple of months, whether it's going to break free from the range to the downside. That's something important to watch. But if I may, I would like to add something. We just talked about CEOs, and we released our CEO confidence index last week, and it was very strong in contrast with consumers. So it seems that consumers and CEO don't really agree in terms of confidence level. And so what's important is to see which one is going to catch up with the other one in the next few months.
That was a point I was making, because if businesses are feeling better and they have more CapEx spending and they plan on doing more hiring, they said they needed more labor. The CEOs did seem a little better, so that is good news. Let's see what happens. And this was a great conversation. Thank you both, Stephanie Guichard and also Jessica Kriegel. Thank you.